In this video, I'll provide a review of the Coca-Cola stock and what I personally look for when evaluating potential stock purchases. I'll run through what the company does, how they make money, then look at some of the numbers and metrics that I find useful in evaluating companies. My personal goal is to create a dividend portfolio that provides me with a passive income. For me, stock analysis for my goals comes down to 2 points. Does the company have a history of paying reliable and growing dividends? And can this company continue to make profits and therefore pay dividends for decades to come? So what do Coca-Cola do? The Coca-Cola Company is the largest beverage manufacturer and distributor in the world. As the name would suggest, they are predominantly engaged in the production and sale of Coca-Cola, which is a cultural institution and instantly recognizable brand across the world. In fact, Coca-Cola is the most valuable non-alcoholic drinks brand in the world by revenue, and is sold in over 200 countries. On the whole, the Coca-Cola Company don't actually sell finished Coca-Cola products as we know them, in bottles and cans. They typically sell this syrup concentrate to bottlers, who then produce the finished product after combining the syrup with carbonated water and sweeteners. These bottlers hold a Coca-Cola franchise and have geographically exclusive contracts with the company. The bottlers then sell, distribute and merchandise the finished Coca-Cola product to retail stores, vending machines, restaurants and other outlets. This is what's called the Coca-Cola system. Sales of the concentrate syrup contribute nearly 2/3 of total revenue. Coca-Cola have a massive supply chain system giving them significant economies of scale, with over 20 distribution channels and 30 million customer outlets. Coca-Cola comes in a huge variety of flavours and types. Alongside regular Coca-Cola, there's Diet Cola and Coke Zero, and all of these have an assortment of different flavours. It's not just Coca-Cola that they sell. The Coca-Cola Company own over 500 beverage brands including Sprite, Fanta, Schweppes, Smart Water, Powerade, Vitamin Water, Minute Maid and Innocent. 21 of these brands bring in more than $1 billion annually. You might also be surprised that the Coca-Cola Company own Costa Coffee. This acquisition took place in 2019 for $5.1 billion. Costa Coffee owns around 4,000 coffee shops, but also has its own coffee brand under which it sells roast coffee and coffee pods to consumers, alongside other drink-at-home coffee products. Considering Costa Coffee's revenue was $1.7 billion in March 2018, the acquisition should have a noticeable impact on the company's revenues and revenue growth in the long term. Let's now take a look through the numbers that I find useful in evaluating stocks. Coca-Cola has a current dividend yield of 3.3%, and last year's dividend yield averaged at 3.25%. So it's a positive sign for dividend investors that the yield has increased. It means we're getting more income for our money than we did last year. Coca-Cola have increased their dividend consecutively for 59 years, which makes them a dividend king. This is a company that's raised their dividend every year for at least 50 years, which is a pretty remarkable feat. Over the past 5 years, the average dividend per share growth rate was 4.5% per year, and during the past 10 years, the average dividend per share growth rate was 6.8% per year. So the growth has slowed down, but this could be expected with an extremely mature organisation that has increased its dividend for so long. The important thing for me is that it is still growing, albeit at a slower rate. The payout ratio is currently 91.06%. This just shows the proportion of earnings a company pays shareholders in dividends, and is expressed as a percentage of the company's total earnings. With payout ratios, obviously the lower the percentage the better, and I tend to consider around 80% as being a high ratio. So if we look at the payout ratio history over the last 10 years, the first thing that jumps out is the 2017 figure. This isn't a mistake. The payout ratio is calculated by dividing the total dividends paid by net income. So just to clarify this, we can see that the company financial statements in 2017 show $1.283 billion in net income and $6.32 billion paid out in dividends, which gives us the 493% payout ratio. We can see that this is a unique occurrence, as the average payout ratio for the other years is 70%, which I think is a good ratio. I looked into the financial statements to see why net income was down so much in 2017 and found this explanation. Net income attributable to shareholders of the Coca-Cola Company for the year ended December 31st, 2017 was unfavourably impacted by a net provisional tax charge of $3.6 billion recorded by the company as a result of the US Tax Cuts and Jobs Act signed into law in December 2017. So this unexpected tax charge explains why net income was down so much in 2017. And with the payout ratio formula of dividends divided by net income, this also explains why the payout ratio was so high in the year also. That being said, it is a little worrying that the payout ratio does seem to be trending upwards if we exclude 2017. A high payout ratio doesn't leave much room for dividend growth unless the company can increase their net income. But saying that, one of Coca-Cola's long-term goals is to keep increasing the dividend and also obtain a 75% payout ratio over time. The market cap of Coca-Cola is $217 billion, which puts it 30th in the largest American companies by market cap. I do like these large blue chip companies in my dividend portfolio, as they tend to be mature, stable organisations, and the dividends do tend to be safer than smaller cap companies or new startups. Coca-Cola has a share price of $50.35, and this puts it in the higher end of the 52-week price range. The 52-week low price of $36.27 happened in March 2020, and the stock has bounced back since then. The current price does seem to be quite stable when you compare it to the 50-day average of $49.84 and the 200-day average of $50.69. So now let's look at the yearly dividend history of the company. Coca-Cola first started paying dividends in 1963 and have increased their dividend every year ever since. We can see this on the graph from 1990, which shows a clear upward trend. This is obviously very pleasing as a dividend investor, as it shows me that the company is committed to not only paying dividends each year, but also increasing them too. Businesses that can grow their dividends at a decent rate and maintain a stable payout can generate substantial wealth for shareholders over the long term. So now let's have a look at the chart showing Coca-Cola's revenue, cash flow and net income. Whilst it is important to look at dividend history, we also need to look at the company's earning potential and trends, as the revenue and profits of the company will drive future dividend payments. If I'm being honest, the downward trend in revenue is a little concerning at first glance. Obviously, we'd want to see this increasing. But to look on a positive note, the revenues are a gigantic amount, and even at the lowest point on the trend line, that is still $33 billion in revenue, which would be much, much higher than the revenues of the majority of other companies. Pre-2020, it did seem like the revenue was recovering, as it was starting to slope back up. But then the COVID-19 pandemic of 2020 would have severely hindered revenue generation, with a lot of the sales outlets being closed, such as restaurants, bars, sports stadiums, music venues, etc. Net income is also fairly consistent, but the line is somewhat skewed from the events in 2017 that I mentioned earlier. On the subject of net income, one thing worth noting is that Coca-Cola's profit margin has seen a marked increase during the time frame on this graph. If we look at the profit margin graph to illustrate this, we can see that up to the end of 2017, the profit margin averaged 15%. But from the end of 2018, the average jumps to 23%. I have omitted 2017 from this discussion, as per my previous comments about the tax charge that they were hit with. A good margin will vary considerably by industry and size of business, but as a general rule of thumb, a 10% profit margin is considered average, a 20% margin is considered good, and a 5% margin is considered low. So for Coca-Cola to be pushing 20% is outstanding. It's really pleasing for me as an investor to see a company grow their profit margin. Even though their revenue has been decreasing, they are able to keep more of it by keeping their expenditure down. The cash flow has remained consistent too during this period, averaging at around 7.1 billion cash inflow each year. Again, this is great to see, as at the most fundamental level, a company's ability to create value for shareholders, either through business growth or dividends, is determined by its ability to generate positive cash flows. So what is my opinion on Coca-Cola? For me, Coca-Cola is one of those companies that I can say with pretty much near certainty won't be going anywhere anytime soon. The powerful brand name, customer loyalty and presence all over the world makes it a real driving force, not just in the beverage world, but also in the wider business world. Coca-Cola has been around for more than 100 years, and its brand and products have stood the test of time. If you were to go to a bar, restaurant, sports stadium or music venue, there's a high likelihood that they will serve Coca-Cola. In addition, most supermarkets and grocery stores stock a multitude of Coca-Cola brands. I also believe that consumers would prefer to purchase their favourite branded product rather than purchase a cheaper alternative, and I can't see this ever changing. With only one major competitor in Pepsi, Coca-Cola's brand, manufacturing and distribution systems, along with their established relationships with retailers worldwide, provide significant barriers to entry for any potential new competitors. I just can't see anyone being able to break this duopoly of Coca-Cola and Pepsi. One minor concern I have is that Coca-Cola does feel like a very mature company, and I am interested to see if they can continue to grow over the years, or whether they'll just remain steady. I think a lot will depend on the markets Coca-Cola expand into, and the acquisitions they make along the way. Coca-Cola does have a presence across the world, but they could look to further penetrate emerging international markets, and also increase their presence in other areas they currently have a foothold in. They are a company that are constantly innovating new product ideas and acquiring new beverage brands, so it would make sense that these new products and brands could be pushed into new markets and regions. In my opinion, the acquisition of Costa Coffee is a really good move, and should strengthen its presence in the coffee category, particularly in the UK, where Costa Coffee has more than a 1/3 share of coffee houses. With coffee shops being shut for the majority of 2020, I'd hope that once these reopen in 2021, this will provide a much needed boost to revenue. They could also expand into new markets around the world where Costa doesn't currently have a presence, so maybe the USA for example. In conclusion, with their instantly recognisable brand, diverse portfolio of high income yielding products, and strong dividend history, I personally believe that Coca-Cola would be a great addition to a dividend growth portfolio. I currently hold 32 shares of Coca-Cola. They're currently my third largest holding by market value in my portfolio. This isn't investment advice, and you should always do your own research and due diligence before making any stock purchases. I hope that you've enjoyed the latest video in my stock review series. If you have, please like the video and subscribe to the channel to make sure that you don't miss any future videos. Please also feel free to check out some of the other stock review videos I've done on my channel. And finally, please let me know what stocks you'd like me to review in the comments section below. Thanks again for watching, and I'll see you in the next video.